Hi everyone, another quiet day in the markets, another quiet week in the market. I'm only kidding, of course it hasn't been. Every time I do one of these stock market updates, I say, wow, this is a really important one. And then a week of events show that we're going to have a really important one the subsequent week. And so this is a really important one. Welcome to it. You won't want to miss this one. Some amazing, incredible insights, if I say so myself, and I do regularly. Price earnings ratios. This is share prices relative to profitability, energy undervalued, banks diversified. I can imagine you want to stay clear of these because you're worried about the financial crisis. Asset managers, nevertheless, they are undervalued. And we're seeing a bit more green than we're used to seeing in terms of valuation right across the S&P 500, interestingly enough. We'll keep an eye on those, and I'm going to deep dive into some of these later as well. What about performance? Well, again, energy's had a good week. Interestingly, drug manufacturers, COVID's flying ahead. In fact, my wife's got it. Is the drug manufacturers doing well? And for the first time in a long time, consumer defensives, particularly in beverages such as PepsiCo, Coca-Cola, they're doing well as well, at least in the past week. Okay, so we'll deep dive into some of these in just 1 second. What about another and different measure of valuation, which is the price to profit growth, price earnings growth, PEG. Energy undervalued, pretty much not much else, I'm afraid. You got some of the auto areas, but not much else. So let's look at what's happening in these markets. Well, this is where we are at the moment. Option 2, we could drop, I would say, another 15%. Let me just write those things out so you can see them. Option 2 would be that drop from where we are at the moment down to here, and that would be option 2. Or we have some kind of joint government action. Well, they've just missed the opportunity at the IMF. Maybe they'll take it through some emergency meeting, that like the type they had in the 1980s with Ronald Reagan when the dollar was ridiculously strong. Hint, hint, there's an idea. And were that to happen through some global concerted action, because they're all facing the same problems, certainly in the G7, higher inflation, higher energy costs. If they do indeed do something like that, then you might see some tailing off. Now, they don't want to see asset price inflation, so they don't necessarily want to see this going that way. That's not anybody's job in government at the moment, not at the moment. They just want it to go more steady rather than declining. Is that a possibility? Well, I'm not going to gamble on that. I'm going to wait another week, see what happens. For those who are interested in technicals, those monthly MACDs still on the downside. So we're going to have to wait. We're going to have to wait. Whilst that's oversold and you could see some moves up, those shouldn't be long-lived because this monthly MACD will overpower it. Okay, what have we got with Apple? Some of the Bellwether stocks. Well, we're on that upward channel and it has indeed bounced off it. But I'm worried about this and I'm worried about these falls. These analysts and from these various banks have been saying buy, buy, buy to their clients. You should get some short-term rises because of the monthly and weekly stochastic, which tends to be a bit premature. But look, what could we get? Well, worst case, we might be up just 11%. Better case, 34% in about a year. Well, I'd take either of those in this market. So my view on Apple at the moment, whilst I continue holding it, let's just hope it keeps to this lower barrier. That's going to be important. In fact, what we've noticed recently is some of them fall a little bit below and then go back up. So I'm not worried if it falls a little bit more. How about Microsoft, another bellwether? And again, it sort of saved itself up here. You know, I wouldn't be surprised if it drops another 5%. That wouldn't surprise me. Lots of buys there. But that's still falling relatively sharply. This will put the brakes on the falls, really, is the short-term weekly MACD and the monthly stochastic and the weekly stochastic, because they're oversold, so their next direction can only be upwards. And if it does go up a little bit, you'll get some skidding along here before I suspect, you know, you've got some 5% to the downside. Overall, I still like Microsoft, and why wouldn't you? Okay, what about Amazon? Well, Amazon, we're right there. Look at that. We've actually pierced that lower direction there, that lower base, and the markets all look like they're suggesting it could just skid along there. So I'm not going to get over optimistic and say we're going to go 46% to the upside, but let's just say we get, I don't know, a few percentages below 10 over the next year would be a bear case rather than a base case. Okay, a bear case. In other words, I don't see mega falls on Amazon to the downside. Famous last words. Meta, still looking pretty atrocious after its falls. This is just there, not to say what would happen, what will happen rather, but what would happen. If that did happen, you would have, over the next couple of years, 180% return. You're not going to get 180% return in Meta over the next 2 years. But that's just to show what could happen if it returned to all-time highs. Okay, Costco, as you know, one of the ones that I really like. Again, it's kissing that support line, as so many are. And the MACDs are lower, and that's why, whilst you might get some short-term support and keeping it there, you really need to watch out for that. I don't think it's going to pierce lower than that. I think we're really looking at, over the next 12 months, a 22% return in Costco, which isn't bad. Anybody would take it. PayPal, you know, had this horrible fall. All I keep reading is how wonderful it is. Every single bank giving it buy ratings, buy ratings, buy ratings as well. It's dropped off, come back. Let's just say it sticks to this line. You'd get 42% in 2 years. From the low point. So you'd have to retrace that to work that out. I'll probably update that by next week. Where are we on Johnson & Johnson, which always comes up in the news? That's my son. Rian, which way is the stock market going to go? Up or down?
I don't know.
You don't know? Oh, you'll know more than the Bank of England does then. Now, we've got this. We will probably get that going that way. Maybe a 1% return on Johnson & Johnson. Yeah, what you might say, well, wait a minute. Why have so many hedge funds and pension funds put their money in there? The reason they put their money in there is they know it's relatively safe. They've got to put it somewhere, and they don't want to put it in a bank account. So they reckon, you know, it's not just safe that you might get 1.7%, but you might even get 10% if it does this, and that means you match inflation. Of course, they're also thinking, well, if we get Zoom, you might even get 18%. Those are the three options. So they'll say base, bear, bull. That's the way they'll look at it. That's the way they'll translate it. Where are we on Qatar and some of the energy stocks? Well, they've held on, despite it looking like they weren't going to, and they're still on track. And you can see what I've drawn here. Okay, from there, it's a 51% return over 9 months. Obviously, it's captured some of that already, and it helped what OPEC Plus did. Now, this is the point I was making earlier. See, some of them are falling below that support line and then going back up above it, which is, you might think, well, that's pretty useless then. Having said that, if this continues along that route, then in a year, you're looking at 81% return in Halliburton. And these are the channels along which it'll probably move. So there'll be times when it looks, oh my God, it's going amazing, but don't project that forward because it's got a resistance there. Equally, it'll be falling, and don't think, oh my God, it's finished. No, because it's just falling in an upward channel before going back up again. And that's how you've got to think about stock prices. What's the overall direction as opposed to the short-term movement? Marathon, well, what I've said is if it keeps to that, that's what we're looking at. 70% return in 1 year. Those will have to stay up. That's not a problem. These aren't a problem either. Okay, Occidental, as you know, I own Occidental, and we're on target for that 43% return since we purchased it, which was earlier than that actually, but we're on target for that. And you can see where I've drawn this green line, what I think will happen. And this is just to show you what might happen on a worst case. You could get a drop of 20%. That doesn't look likely at the moment, and it looks set to do that. You might even want to print this out and just check it every week. Okay, Devon Energy up 156% is the projection. I mean, obviously a bit rough and ready. Nothing's guaranteed on those, but have a look at that. Pause this at any moment you wish. In fact, I'll move my fat face out of the way. Jeez, that face is getting fatter and fatter. So Marathon Petroleum as well, similar 60%. There we go. Adobe. Look at all those buys and holds. So who the hell's selling it then? Obviously, clearly people who ignore every single bank out there, which tells you should always ignore all the banks out there because look what they've done. Nothing. This is still going lower. Okay, still pushing lower. And so that's the direction of travel there. Okay, so let's go to Eli Lilly. Rian, seriously, which way the stock market's going to go? Nowhere. I know they're going nowhere at the moment. Eli Lilly, we're looking at a 40% return. You can see where I've marked the worst case, which would be about 10% trailing stop loss, which isn't a bad stop loss. It's quite a tight, nice one. And that's the direction. If you were to print this out, and as long as it stayed within here, you'd be fine. And if it got to the top, you know, you got a bit of a bonus there. Okay, so British pound against US dollar. This is what we've got. As you know, I've been buying pounds against the dollar, and whilst that's not been a one-way bet, because it's done this and then that and all the rest of it, anyway, that's what I'm anticipating. And just don't over leverage on this, because that's where people go wrong and then they get margin calls. Just ask all those pension funds. United Health Group, another staple, another bellwether. Again, you can see it's gone below this lower band before and then comes back above it. So I'm not too worried about this. I don't think I hold this at the moment. And you can see the danger is likely to fall lower, which could cause it to stay lower longer, in which case this isn't going to happen, which was the 37% over a year that was anticipated. So anyway, APA, you can see the direction. Again, what's been projected, easy to interpret that now. You get the grip. I've got a whole lot, I've got 12 more slides, so don't go. Look at my campaignforamillion.com, please, to learn more about the markets and investing. Boy, did you need that. Goldman's S&P 500 scenarios. This is what they think. End of 2022, 3,600. Well, anyway, they put a whole load of measurements here. Who cares? They're probably wrong. Now, home prices are forecast to fall in some major economies. No kidding, Sherlock. US, UK, and Canada. There you go. This is where we are, and they're expected to drop. What is that? Not quite 20%, 10 to 15%, you'd say, but certainly they're forecast to drop. US stocks reverse dramatic rally as investors bet Fed stays the course. Well, this is the S&P, and there's the NASDAQ, October the 3rd until October the 7th. Just look at that, hey? It's gone, whoa, because they think interest rates will continue rising. Gold, where's it going? Who's buying it? If you're into gold, and it's fallen recently, I believe. I'm not really a gold bug, so I can't really tell you more. It's the Chinese, the Indians, and the Turks, and the Thai to some extent as well. Certainly the Americans and the rest of them are getting rid of it. Changes in mortgage rates versus house prices. What looks to be the case? And again, you might want to pause in this. Okay, at the same point in time, what this shows is you can have rising mortgage rates and rising house prices. That can happen. What tends to happen a lot is this scenario, because you've got the most balls there, as it were, which is house prices rise, but mortgage rates decrease. Well, we're not in that scenario, are we? Okay, we are in the mortgage rates increase scenario, which is this one. And where do you get most of the balls? Well, you still get them here. Okay, which means house prices can rise and mortgage rates can increase. Okay, and it's very rare in actual fact to get rising mortgage rates and falling house prices. So, a bit of good news there for the eternally optimistic. S&P 500. I've shown this already, so I don't need to go through that. Microsoft I've shown. That was a very nice comment from someone. You don't need to read that, just praise about me. And US mortgage rates soar to the highest level since 2007. US, so it's not just Britain. So when the former Chancellor said, it's not just us, he was right. It's not just us. What he wasn't right about is that ours went a bit more because of domestic political considerations. So it wasn't just as correlated as it would have been along these periods. It extended more. Put another way, there was a greater beta. US stocks are becoming less expensive. So again, some good news. US stocks are getting cheaper. A multiple of 16 now in this quarter. How far are we going back? Well, we're looking at sort of pandemic levels almost, when they overshot to the downside. That's all good news, of course, that they're getting cheaper. We need that before they can go up again. Big US companies expected to post slowdown in profits growth. That's partly because of a strong pound, but also these are just expectations. And of course, they're going to get a slowdown in profit growth. There's an increased cost in energy. There's an increased rise in consumers lacking confidence. So that's why it's going to, and governments have got less money to spend. So guess what? Consumption goes down, government spending goes down, costs go up, obviously profits go down. It's a wonder we're still talking about profits, which is a good thing that we still are able to. Stronger dollar is correlated with fewer revenue beats. That'll beat down expectations. Remember, in a market, stock prices go up when expectations are beaten. So the first thing you need is to beat down expectations. This will beat down expectations, which will allow companies to overstep those expectations and therefore lead to higher share prices. So it's all good in a way that this is happening for us investors, because it might not be that we're buying today, but when we know we're getting ready for the base conditions to be in place for us to get ready to buy. There's a better image of the sterling US dollar, which I put up there. So if you look at this as an inverse head and shoulders, for those of you who are into technical analysis, you'd project that forward from the neckline. Okay, I know it sounds like gobbledygook to most people. And that would give you, from where we are today, something like a 10% return over the next 6 months. It seems pretty reasonable, okay, particularly with the new Chancellor in place. So let's see what happens with that. The Chancellor's number one job is to save the Prime Minister's job, okay? Don't be fooled. And the best way to do that is just to follow what the markets want the government to do. And that's what they're going to do. They're going to follow what the markets want. And what the markets want is a very conventional IMF type economic policy, which will mean higher taxes, lower government spending, and very sensible conventional economic policy. There's nothing necessarily wrong with sensible conventional economic policy. There'll be a time to go for growth. This isn't the 1980s. So this is what will probably happen, I think, and that'll give recovery to the pound, not least because the dollar will fall as well. Okay, thank you all very much. Hope you found that useful.